Hey everybody, this is Halstead and Andrew McMillan with REH CPA. I hope you're doing well. Today we want to talk about vacation home sales. I know a lot of you out there have, your normal primary residence, but some of you also have vacation, whether you rent it or you just have a vacation home. What happens whenever you go to sell that? There's some pretty complex tax implications to selling a vacation property depending on how you used it. I've got Andrew McMillan here with me today. He's going to go over those tax implications and give us some insight on how that works.
Yeah, so a lot of times when we have a client that has sold a vacation home, sometimes it's a home that they once lived in for a little. There's some mixed use here. They might have lived in it for a little while, or it could have always just been a rental home. So you kind of get dropped into three different categories when it comes time to sell a piece of property, a home like that. So the first one being, like, let's say you're selling your primary residence, what is currently your primary residence. Most everyone knows that there's a gain exclusion. If you're married and you've been living in that home for 2 out of 5 years and you own it and use it,
And it's your primary.
and it's your primary residence, then you're eligible for a $500,000 exclusion if you're married, or a $250,000 exclusion on the gain if you're single. But you also have to be aware of this other little wrinkle that can come into play, is if the home was ever rented. If you ever used this home as a rental after 2008, so since 2008 after, if you ever used it as a rental property, you have to figure out your portion of non-qualified use. So the amount of time that it was rented after 2008, you have to figure out how many days that was compared to how many days you've owned the property and used it as your primary residence. And you figure out the fractional percentage there, and you have to take that percentage against how much of the gain exclusion you may be eligible for. So it gets a little complicated. So that's one scenario when you're selling a vacation home that might have been a primary residence at one time. If there's been some mixed usage there, it definitely gets a little complicated. The other bucket that you can get dropped into is, like, say the vacation home is purely that. It's just a vacation home that you have used at times during your life, but it was never rented like that. Then that, when you sell that property, it's just pretty much a straight capital gain on that it's sold, and the gain that you're going to pay is going to be at a capital gain rates. You also have to be aware that if the gain's large enough and you get into some higher income, then you have to pay the net investment income tax on that, which is an additional 3.8% tax. The last scenario would be if it was just a straight rental property that you've always had. Then when you sell that property, the gain's going to be taxed a couple different ways. Part of the gain's going to be taxed as a capital gain. The other part of the gain is what we call depreciation recapture. So you have to essentially recapture the depreciation that you have taken and pay taxes on that at, it caps out at a 25% rate.
Which that's the piece a lot of people don't think about. Whenever it goes time to sell a property that they've depreciated, they don't know that depreciation recapture. We've actually done some pretty good videos on depreciation recapture if you want to check through our YouTube channel. But yeah, that's definitely something to be aware of.
Yep, so it's just, anytime you go sell a piece of property like that you've had some mixed usage in, it gets complicated, like you said, so you just want to make sure you understand the different tax implications that are going to come into play.
Yeah, so if you're getting ready to sell a vacation property and you have questions concerning taxes, or if you think you're going to be selling one in the future, I would actually prefer you to come talk to us now so that we can do some planning to try to get around some of these things to lessen the tax impact. Feel free to give us a call and set up an appointment. Thanks.